Hello guys, welcome back to my channel Commerce Insight. So today we are going to continue with the next topic, balance sheet from chapter 10, ratio analysis of introduction to financial market for grade 10th, introduced by Cbse skill subject. So last video we have discussed till earnings per share and PE ratio, which comes under the profitability ratio, and we have discussed each and every ratio in details. Please do watch my other video. If you're having any doubt, please do comment. Now moving on to the next topic, that is we are going to learn different types of accounts that is maintained by the company. Now here I am giving you the format. All you have to do is you have to understand where the items are falling, and do not by heart, just understand where the items are coming in balance sheet as well as other two format. Now starting with balance sheet. Balance sheet is an account where the companies will list their fixed asset, all their asset and all their liabilities. Fixed asset means asset are classified into two. First is fixed asset, other one is current asset, and liabilities also classified. Where first you will be writing your capital. Capital means the money that is invested into the business, and there are long-term liabilities, there are current liabilities. So these are the classifications. Now capital. In capital, to find capital there are certain steps which you don't have to learn, but as part of format it is given here, which you don't need to worry again. It will be given in your question with the amount. Now there are items coming here, so according to the heading, the fixed asset. In the fixed asset there are goodwill, land, building, plant and machinery, furniture and fixtures, investment. These are the items that are coming under fixed asset. Now going to current asset, there are closing stock, accrued income, prepaid expenses, sundry debtors, bills receivable, cash at bank and cash in hand. These are the items that are coming under current asset. Now moving to long-term liabilities, there is loan. Now loan can be classified into two, that is secured loan and unsecured loan. So be careful when it is given in the question. Now for example, debt is considered as debt means that for finding debt equity ratio. So total debt by total equity, isn't it? So total debt means secured loan plus unsecured loans. That is known as loan. So long-term liabilities. Now moving to current liabilities, income received in advance, sundry creditors, outstanding expenses, bills payable, bank overdraft. Now the speciality of balance sheet is all your asset should be equal to all your liabilities. Means the balance of both the accounts will be equal. For example, your asset is 10 lakh, your liabilities is also 10 lakh. So balance sheet means all your asset should be balanced with your liabilities. So this is balance sheet format, and again I am telling, no need to worry, all your items along with the amount will be given in your question, and all you have to take the necessary items and to be substitute into the formula. Now next topic is trading and profit and loss account, where normally in trading and profit and loss account will be one single account, where the first will be your trading account and remaining will be a profit and loss account. For your understanding, I have split it into two, and again please don't worry, everything will be given to you, and all you have to do is take the necessary item and substitute into the formula. Now for your understanding, please understand which items falls where. Now in the trading account there are two accounts, two sides to an account, that is your debit side and credit side. Now debit side is all your expenses and losses, where you enter all your expenses, and credit side is all your incomes and gains, where you enter all your incomes. Okay, I hope that is clear. So there is opening stock, purchases, return outwards, wages, carriages, freight, all these things are the items coming here. On the expense side, expense means something which we are paying, that is the expense. So it is always shown in the debit side. And sales means something which we are getting as an income from the company's point of view, where the company is getting income, that is your credit side. So sales, that is an income. Closing stock, that is an income. Now when you balance it, if your credit side is more, means you are getting profit. If your debit side, if your expense is more, means you are getting loss. So that is gross loss and gross profit. So keep it in mind. If your credit side is more, if your income is more, you are getting gross profit. If your expense is more, you are getting gross loss. I hope that is clear. Moving on to the next topic, that is next account, that is profit and loss account. Now in profit and loss account, again same as trading account, all your debit side is your expenses and all the items coming under the credit side is your profit. Again, expense, profit, expense, profit. I hope that is clear. Now all these items listed here, which I am not telling, all these items, please pause the video and take a look at the items. All these items coming under in the debit side are your expenses and all the items coming under your credit side is your income. Again, if the income side, if the credit side is more, means you are getting net profit, and if your debit side, all your expense side is more, means you are getting net loss. Now you are seeing here gross profit, gross loss. Now after balancing your trading account, if it is gross profit will be shown in the credit side. Since it is a profit, it will be shown in the credit side. If it is a loss, it will be shown in the debit side. Debit side means your expense side. Again, you're balancing it. So from the gross profit only, we are paying all the expenses. From where? From the gross profit only, we are paying all the expenses, and after paying all the expenses, the remaining profit is the net profit. So again I am explaining, from the profit, from the gross profit, we are paying all the expenses and the remaining profit is known as net profit. I hope that is clear. So this is today's topic. We discussed about balance sheet, then we discussed trading account and profit and loss account. I hope that is clear. Now moving on to one question to be discussed, where I am discussing all the important ratios. Now as I said, all the items will be given to you directly. All you have to do is take the necessary items from the question and you have to substitute into the formula. Now balance sheet of AAJ Associate Limited as on 31st March 2024. So this is the financial statement. So this is the balance sheet. You are having liabilities, you are having asset. In asset there are two kinds of asset: fixed assets and current asset. Amount is given, share capital is given, reserves and surplus is given, loans are given, current liabilities are given. Again, as I said, your liabilities always match with your assets. So the total of the balance sheet is 25 lakh. Now profit and loss is given. So in profit and loss, as I've shown in the format, there are two different accounts. Now as I said, all the trading and P&L account is shown in the same account, means it will be coming just under the balances of the trading account, that is this. I hope that is clear. Now yes, the total, see below the total only the P&L account starts, above the total these are the trading account. So all you have to do is just take the necessary items. So this is the question. The profit and loss is given here. There is opening stock, gross profit, then net profit, and from the net profit only we are paying the income tax, equity dividend, etc, etc. Now the questions, from the above financial statement you are asked to find the four ratios. Now the first ratio is liquidity ratio. Under liquidity ratio there are two ratios, current ratio and quick ratio, or we can say asset test ratio. Now what is the formula to find current ratio? Current asset by current liabilities. Now what are the current asset? Current asset, go to the question, you go to your balance sheet, current asset. Current asset is cash, debtors, inventories, prepaid expenses, short-term investment. Add all the items here, you are having the total of current asset. Now current liabilities, in the same questions we are having current liabilities. We don't have any items that are coming under current liabilities as shown in the format, but here the amount is given to you directly after adding all your current liabilities. Now you are having current asset total is 9 lakh, your current liabilities total is 1,60,000. Now divide 1 lakh, divide 9 lakh divided by 1,60,000, that is your current ratio is 5.63. Okay, I hope that is clear. Moving on to next ratio, that is quick ratio. Now what is the formula to find quick ratio or asset test ratio? Yes, quick asset by current liabilities. Now what are the quick asset? Quick asset means all your current asset except inventories and prepaid expenses. Now you are already having 9 lakh as total of your current asset, isn't it? Now from this 9 lakh, all you have to do is subtract the amount of inventories and prepaid expenses. You will get quick assets. Okay, and then you have to divide it. 7,70,000 divided by current liabilities. Already you have the total of current liabilities 1,60,000 in the balance sheet, and when you divide it you will get the quick ratio. I hope that is clear. Now moving on to the next ratio, that is turnover ratio. Now the first turnover ratio is inventory turnover ratio. Now what is the formula to find inventory turnover ratio? Yes, cost of goods sold divided by average entry. How do we find cost of goods sold? Sales minus gross profit. Now we can find it in other way also. Opening stock plus purchases, wages plus manufacturing expenses minus closing stock. Either way it gives the same. Now cost of goods sold is equal to sales minus gross profit. Now if you are finding sales 3 lakh minus gross profit, that is 1,50,000. Here also if you I'll show the other way. It's COGS, cost of goods sold. The other formula is sales minus gross profit. What is sales given? Yes, sales is 3 lakh minus gross profit is 1,50,000. Gross profit is 1,50,000. That equals 1,50,000. Now in certain questions you will be given certain items like this, where you have to find the profit. Means if the sales is not given, you have to use this formula: opening stock plus purchases, wages and salaries, manufacturing expenses minus closing stock. You will be getting what? All your cost of goods sold. I hope that is clear. Now again I am telling, in the question, if the question is not in the tabular form, okay, if the question is not in the tabular form, now sales is not given, what you have to do is you have to add your debit side minus your credit side. Add your debit side minus your credit side. So opening stock plus purchases, wages, manufacturing expenses minus closing stock gives you, yes, cost of goods sold. Or if the sales is given, gross profit is given, then sales minus gross profit, that is only you have to do. So you are getting 1,50,000. The other formula I am just highlighting it. Okay. Now what is average inventory? It is simple average of opening and closing stock. So what is opening stock according to question? 20,000. Closing stock is 25,000. Add it. 20 plus 25 is 45,000. 45,000 divided by 2 is 22,500. Now once you are having all the items, what is inventory turnover ratio? That is cost of goods sold divided by average entry. Your cost of goods sold is 1,50,000, average stock is 22,500, so divided you will get 6.67 times. It is in times, don't forget to write time. Okay, moving on to next turnover ratio, that is debtors turnover ratio. Now what is the formula for finding debtors turnover ratio? Yes, net credit sales divided by average debtors. Excuse me. So assuming all sales are credit sales, so since in the question there is only one sales given, now we assume that as a credit sale. Now your credit sale is already your sales, or we can say net sales is already 3 lakh. Your average debtors means there is only one debtor in balance sheet, so we assume that is the average. So average debtors is 1 lakh. Now the turnover ratio is simply divided, so 3 times. I hope that is clear. Now how do we find average collection period? Once you find debtors turnover ratio, we can use the second formula, that is 365 days divided by debtors turnover. What is 365 days? It is 365 days, that is 1 year. 365 days divided by average debtors, that is 121.33. I hope that is clear to you. Okay, moving on to the next ratio, that is leverage ratio or capital structure ratio. Leverage ratio is given according to your textbook. Now leverage ratio means debt to equity ratio. The first ratio is debt to equity or debt equity ratio. So debt equity ratio is total debt by total equity. Total debt by total equity. So total debt means secured loan plus unsecured loan. So in your balance sheet there is loans given, secured loans, unsecured loans. So loans means we take money from the bank and we have to pay it back, since that is a liability, so that is a debt. So there are two kinds of debt, so you have to add two kinds of debt to get the total debt. So here total debt is 8 lakh plus 3 lakh, that is 11 lakh, and equity means share capital plus reserves and surplus. Equity means share capital plus reserves and surplus, means we keep a certain amount of money, the surplus amount of money, to another reserves that can be used for the futures, that is coming from the profit of share capital. So we have to add both share capital and reserves and surplus. So that is 10 lakh plus 2 lakh 40,000, that is 12 lakh 40,000. Now you have to divide, you will be getting debt equity ratio. Next ratio is debt to total asset ratio. So debt, we already have debt. Now total asset means total of balance sheet. Total asset means total of balance sheet. See, total your total asset is always equal to total liabilities, as I have explained, that is 25 lakh. So total asset means 25 lakh. So already you are having total debt 11 lakh divided by 25 lakh, that is 0.44. I hope that is clear. Now moving on to the last set of ratios, that is profitability ratio. Now here I have only explained 3 ratios. Now in your textbook there are 4 to 5 or 5 to 6 kinds of ratios. Now according to this particular question only we have to do 3 ratios. First one is gross profit ratio or gross profit margin. Now how do we find gross profit margin? Gross profit by net sales into 100. It is always in percentage. Now we have gross profit in question. Okay, we have gross profit in question, that is 1,50,000. Sales is 3 lakh into 100, that is 50%. Okay, now moving on to net profit ratio. What is the formula to find net profit ratio? Net profit by net sales into 100. Yes, net profit is 50,000 according to the question. Sales is again 3 lakh into 100 is 16.67%. So these two are over. Moving on to return on equity. Now how do we find return on equity? Net profit by shareholders equity. Okay, net profit by shareholders equity. Already shareholders equity means share capital plus reserves and surplus. Now 50,000 is shareholders net profit available divided by, already we know total shareholders fund is 12,40,000 into 100, that is 4.03. so these are the profitability ratio. Now the last one is earnings per ratio. Now EPS is equal to net profit after tax, or we can say profit after tax divided by number of shares outstanding. Now since in the question there is no face value given, we assume that value of each share is rupees 10. So when you're writing as an answer, you have to write this particular line as a note. I hope that is clear. So net profit after tax according to balance sheet is 50,000. Okay, 50,000, and your number of outstanding so 15,000, and the net profit after tax is 15,000. So there is a tax coming in the question. So let's move on to the question. Yes, there is an income tax 15,000, isn't it? So net profit is 50,000. There is an income tax 15,000. So in the question, sorry, according to the formula, we need net profit after tax. So 50,000 minus 15,000, that is 35,000. So this is our actual net profit. Okay, now share capital is 10 lakh. The total share capital we have is only 10 lakh, assuming the face value is 10. So number of shares we are having is 1 lakh, that is 10 lakh by 10 is 1 lakh. Now how do we find EPS? That is net profit after tax divided by number of shares, that is 35,000 divided by 1 lakh, that is 0.35 rupees, that is earnings per share. I hope there is no doubt in this particular question. Again, moving back to the question, so everything is given to you, okay, please take a pause and write down the question, and then try to do it by yourself. I hope if there is any doubt, please do comment on my channel. I'll make the video on your doubt, and please write down. I'm making a pause over here. Yes, so this is all about this question. If you're having again any doubt, please do comment. So all the items will be given to you in the question. You don't have to study the format. All you have to understand which items are falling under which headings, and try to learn all the formulas and try to understand why it is being taken like that, and learn the different types of ratios. Okay, so this is all about the ratios. If you're having any doubt, please do comment and like my channel. So thank you and have a good day. Bye.